I'm Jeff Sanford. We're here at the Canadian Business Leadership Forum 2008, and I'm here with Jamie Sokalsky, top CFO with Barrick Gold. And you just won the CFO of the Year award from Canadian Business Magazine for your role guiding Barrick Gold through what's been a pretty crazy environment. How do you take a corporation like Barrick and pilot it through these crazy times?
Well, I think one of the things that we've done that's really helping us now is make sure that the company has been managed with very conservative financial principles. And you know, in the past, sometimes you think, well, are we being too conservative and doing lots of things that perhaps are not as aggressive as other companies might do in the business. And we're very pleased that we've set the company up very well with a strong financial foundation. And as we've gone through these volatile times, that's really paying off. We're in great shape to weather this storm. There will be challenges. We're going to have to adjust the way we do some things because of the way the world has changed. But we're in a great position to do that because of the prudence that we've shown in the past and a resolve to continue to do that going forward.
Sure. What's it been like at the company working through this time? Are there some late hours? Is it pretty stressful? I mean, you just see the price of gold all over the place. It's hard to keep up, you know.
Well, I think we're always working pretty hard, so I don't know if the hours change that much, but we're certainly having to work a little bit harder to assess and review our business plans as a result. So yes, I wouldn't say it's particularly stressful, but it's created some additional effort and work to make sure that we pilot the company through this in perhaps a different way as we look through how we're going to develop some of our growth pipeline and manage the company. So, and we're certainly watching the screen and seeing that gold price go up and down, and that's taking a little bit of focus as well.
Sure. I mean, it's great to see it go up, isn't it? But you know, there's something that was mentioned in your presentation. You guys actually have spend a lot of money on oil, don't you? And that surprised me. And so you've bought some hedges in Alberta, some energy projects as hedges. Can you just go through that? I wasn't aware that a gold miner would have that much of a transportation cost involved. Well,
that's right. I think it was a bit of a unique type of transaction, but energy is about 25% of our total operating costs. Oil, natural gas, power. We have a significant amount of trucks that are mining open pits, underground, significant amount of operating equipment that requires a lot of diesel fuel. And as a result, the fluctuations in the oil price have quite a dramatic impact on our cost structure. And in the past, and we continue to do this, we manage some of that exposure through the futures market. But we also felt that this opportunity for us to buy an oil company and actually get direct access to oil at cheaper prices than were available in the futures market helped to augment an overall risk management program. And we're very proactive at risk managing all our costs, not just oil, but currencies, many different types of inputs, and this is just part of that.
Sure. I've got to ask the one thing I'm sure everyone's going to ask. Is gold going up from here?
Well, we don't necessarily have a crystal ball on that, but we may see some short-term volatility, but in the long run, we feel very bullish about the gold price. You know, some of what we've seen in the last little bit is related to overall liquidation. But gold mine supply is likely in the industry going to drop. There's going to be all kinds of reasons to buy gold, geopolitical uncertainty, increased investment demand. And so we feel very good about the gold price going back up and maybe even hitting new highs.
Sure. That's something not a lot of people, I think, are aware of. There really is a dearth of new gold mines, aren't there?
There are, and this environment, this credit environment, is going to make that even more difficult. Many smaller companies, even larger companies, are going to have a hard time raising money, getting financing to build these mines. And as a result, I think we're going to see an even larger dearth of gold mines, and that's going to impact supply in the future, and that should be good for the gold price, with demand likely staying strong as we move forward, the supply dropping. we think that will be positive.
That's great. Well, thank you very much, sir. Much appreciated.
You're welcome.
I'm Jeff Sanford, reporting from the Canadian Business Leadership Forum 2008.